The upcoming 2024 Bitcoin Halving event is a principal focus right now for every Bitcoin miner. For those of you who aren't familiar with the halving event, Bitcoin miners are rewarded with or paid in Bitcoin by the Bitcoin network for their computing output. The Bitcoin Halving, a recurring event that happens about every 4 years or so, essentially cuts that reward in half, or inversely, doubles the cost of power needed to mine 1 Bitcoin. Today, we want to discuss with you TeraWulf's strategy leading into the halving and why we believe we are poised to emerge as one of the successful miners following this event. Managing through cycles is fundamental to the way we run our Bitcoin mining business. Our philosophy continues to be that as a low-cost producer, these markets present opportunities for us over the long term. As we approach next year's halving, we remain focused on 3 key differentiators that position TeraWulf as one of the leading low-cost Bitcoin miners: our cost of power, our fleet efficiency, and our ability to scale.
In producing Bitcoin, we spend the majority of our operating expenses on electricity. Given our background in energy, our focus at TeraWulf has always been procuring sustainable, low-cost power, both at term and at scale, to produce the best possible unit economics. The reason cost of power is so important in light of the halving specifically is because overnight, this cost will effectively double. This event could have a potentially devastating effect on the miners with higher costs of power and therefore higher unit economics. Even a 1 cent difference in the cost of power could be the determining factor in the success or failure of a Bitcoin miner. Today, we have one of, if not the lowest, variable cost per Bitcoin in the sector, and we consistently rank number 1 in cost of power and gross profit margins when compared to other publicly listed Bitcoin miners. At our nuclear power facility in Pennsylvania, TeraWulf has a fixed 2-cent power contract agreement for a term of 5 years, and that's a fully loaded 2 cents. There are no adders on top of that. And unlike the fixed price we have at Nautilus, our power costs float at our Lake Mariner facility in New York and average about 4.5 cents per kilowatt hour or lower, despite the facility's subjectivity to seasonal power price fluctuations. So together, our 2 sites have a combined energy cost of about 3.5 cents per kilowatt hour year-round.
Efficiency will be one of the most important metrics for analyzing miner profitability as we near the Bitcoin halving. Using newer and more efficient machines with a low cost of power makes us a low-cost producer of Bitcoin, giving us resilience in the bear market and operational leverage in a bull market. As we approach the halving, squeezing out every possible hash at the best efficiency is critical. Our operational team at TeraWulf has honed its ability to overclock and underclock miners to capture the most value for each hash depending upon ambient operating conditions and the market price for power and Bitcoin. In this past quarter, we made an order for 18,500 S19 JXPs. Once we integrate those miners into our fleet, it will drive down our fleet efficiency to around 25 joules per terahash, giving us one of the best fleet efficiencies in the space, coupled with our low-cost power. In addition to efficiency, the benefits of scale are central to maximizing profitability. Scale allows us to manage the company's fixed costs more efficiently. We expect to stay lean even as our operations grow, which means more dollars to make it to our bottom line. At TeraWulf, we have a saying that all exahash is not created equal. Our current view is that the best potential growth opportunities are already within our own portfolio. The Lake Mariner site can support up to 500 megawatts of Bitcoin mining capacity, and similarly, we have the option to expand by an incremental 50 megawatts at Nautilus. We will continue to evaluate non-organic expansion in light of market conditions, but we will do so only if the underlying mining economics of the business are accretive to TeraWulf.
Our financial objectives are clear and simple. Number 1, maximize profits. Number 2, repay debt. And 3, return value to shareholders while providing investors access through transparency and accountability. Wolf can mine Bitcoin more efficiently and profitably than any of our peers, and our strategy is to return that profit to shareholders in the form of debt paydown, organic growth, or dividends and share buybacks, not by hodling Bitcoin on our balance sheet. As a longtime energy, power, commodity institutional investor, there's no other commodity business that I've ever invested in that does not sell what they mine. They don't hold onto it because they are speculating or thinking that prices could be higher in the future. And so We are not gambling with our investors' money. We have a very strict financial strategy, which is to monetize what we mine and maximize those profits. Again, as a longtime institutional investor, when I joined TeraWulf, one of the first things I realized was the lack of uniform financial disclosure by miners in the sector. What we have tried to do is bring the best practices from buy-side investing, but also from company investor relations, and tried to be as transparent as we possibly could and disclose our cost structure just like any other commodity business in the world. And so what we are trying to achieve with our disclosures is a uniform analysis that all other Bitcoin miners can follow, which will allow an investor to choose their commodity price, enter that in, and formulate what our EBITDA will be under their commodity price assumptions. That is a basic economic analysis that all companies should be willing and able to provide to investors so that they can compare TeraWulf vis-a-vis every single one of our competitors. We are pushing that envelope to try to get other companies in the space to provide the same underlying basic facts of their cost structure so that the typical retail, institutional, or research analyst can compare all of us on an apples-to-apples basis.
Institutions are coming into this space and will continue to do so as Bitcoin adoption expands. ESG is at the core of who we are. Being a zero-carbon Bitcoin miner means that our operations are not only good for the environment, but also regulation-friendly. Regulation is here, whether we like it or not, and ultimately we believe it's a good thing because it further legitimizes Bitcoin, which in turn makes it even more attractive to investors. I am one of them. I have invested more personally in this company than anyone, and I will continue to do so. So it goes without saying, I'm in complete alignment with every other Wolf investor out there. Insider ownership at Wolf amounts to over 50%. So every decision that we make is to ultimately return value to you, our shareholders. It's very simple. We only win if you win.